because if you market something really, really well, you never have to sell.
Shake your hands in the air. Welcome to the stage, Linda Kay.
I want to be a millionaire. Let me heal it. It's Linda Kay. When you trust that piece of you that says, I got something to give, you know you've got something to do. When you learn how to market, you learn that you don't have to sell. I have sold over $750 million in products and services. Good morning and welcome to another episode of Money Talk. This morning we have a really special guest who loves to talk about money, and let me bring him on real quick and introduce him. This is Don Hufnagel. Good morning, Don.
Good morning. How's everybody doing?
Well, I think everybody is wondering what in the world is happening with money. And I feel like, I'm surrounded by it. I wear it. I wear the color of it. But you are in the trenches, my friend. You are in the trenches because you are out there finding that money. Now, one thing I know about money is that you can't chase it because it can run faster than you.
Yeah, no, that's for sure. Especially in today's market, it's you have to be fluid in this market. That's for sure.
So fluency in money is currency then, isn't it?
Yeah. You know, like a great hockey player, Wayne Gretzky said, you got to skate where the puck is going, not where it's been. Unfortunately, the Fed doesn't follow that standard.
Don't you wish it did though?
Yeah, we would be in a lot better shape if they did.
So, think of this and talk to me like it is really a sport. How is money like a sport?
Let's see if I can get a good analogy on this. I guess from a strategic standpoint, you have to be planning ahead. You have to strategize. You just can't go into a game and roll out the ball. Like I always say to my son, I said, you have to have a plan. Whatever you're going to do, you have to have a plan. And whether it's money, whether it's a project, whatever it is, I mean, it's just like anything. And being good at money is a lot like any other study or trade. You got to do the work. You got to invest your time and knowledge into understanding how it works and then strategize around that. I mean, it's not overly complicated, but some people see numbers and they just get overwhelmed without just kind of like just breaking it down and seeing, okay, what do I do here? What do I do here? And how does this work?
So I think that, from that perspective, Don, one of the things that I think you just hit on, which is really key, if you don't understand the numbers, you can really be afraid of them. And sort of like the doe in the headlights, right? You're all of a sudden trying to find money to buy something that you want. And maybe you planned for it, maybe you didn't plan for it. It was just sort of a whim, or maybe you've been planning all along. But I think that one of the things that you really have a knack for is finding and fine-tuning that fear out of somebody. You've got a really great way of talking to somebody to calm them down. And in fact, for my listeners out there, is he not the calmest person you've ever heard in money? Because people are scared of it. People are, they've got this anxiety that, oh my God, I'm not going to qualify. I'm not going to be able to do this. I can't do that. And yet money is just simply an energy. That's all it is. The energy that we put into it as well will help us guide and make that money a little bit more fluid. But one of the things that I think that I want to focus on this morning is talking about Why is it so hard to get money right now?
Well, I mean, if anybody's following the market, they see what's happening with the banks right now, and you know, things are getting tight. Things are getting tighter, especially in this type of economy when they say we're entering a recession. And I think we've been in a recession for over a year now, but um,
Are we going to get
the
the memo on it anytime soon?
right. What's the difference between the conspiracy theory and the reality? About 6 months. So it's just like I've never seen it before where they've tried to hide up how bad things are going right now as far as the financial market, and from jobs reports that um, basically inflate the numbers, and then 10 days later they retract them and make a correction. Oh, we were off by
Whoa, whoa,
30
whoa,
plus.
whoa, whoa. Wait a minute. I'm hearing a conspiracy.
Right.
Okay, now let's break that down for our listeners just a little bit. Tell us how things get reported. Tell us how you see it, Don. So let's just say the job report comes out.
Right.
Who's responsible for generating that job report?
Well, there's a couple of them, but unfortunately, the more you dive into this stuff, the more you see the cooperation between the parties that be, from the BLS job report to the Fed. All of them are in somewhat of collaboration to basically put.
Corroboration, collaboration, and calamity. It sounds like so. If I wanted to hear a story go this way and the market was going this way, I might need some help bringing it back to the story that I want to tell. And
Right.
if I'm a power that's in, if I'm the power that be, and I'm in power, and I want to look better. Let's say, for instance, I want it to look like I brought more jobs to the market, and the market's doing far better than we think it is. And then the feds are saying, well, no, because it's really that's not the way it is at all. Because okay, well, we'll say it's like this for a while, but then we're going to have to restate that. Is that what you're saying?
Yes, and in addition to that, it's just the fact of, when you create a job creation statistic based off of just how much the population has increased from migrants coming across, when they don't have any like hardcore statistic to prove that these people are working, and it's just they're just creating jobs out of thin air. I
So
mean,
what does that do to the market? What does that do to our money?
so, in my world, with rates, which is a four-letter
Tell
word
us,
right
tell
now.
us, tell our listeners, what do you do, Don? You're just the magic man with money, but tell them what you do.
So, primarily, do loans on the residential side. I do everything from soup to nuts, from uh, regular bread and butter, FHA, VA, conventional, jumbo, non-QM, which is a qualified mortgage. Traditionally, non-QM means like going through alternate doc, such as profit and loss, stated income, foreign national, bank statement. Um, there's a hot one now, DSCR, where it's basically you treat it as an investment property, and you um, basically you compare a ratio of the mortgage payment versus what you're getting for rent, just to qualify that way without any income. So a very wide variety of products that I offer, and you know there's a lot of creativity in our industry. Unfortunately, not a lot of the loan officers know how to structure loans and make a deal work. And yeah, that's I like to say I solve problems more than anything. People come to me, going back to what we talked about earlier. There's a lot of intimidation in our industry. Buyers are afraid to come to you because they don't think they qualify, or they get intimidated, like, oh, I gotta have everything perfect to get a loan. Not
Oh,
necessarily
you just
true.
said the magic word, Don. This affects everybody's business, whether they're a small business entrepreneur, small business owner, or somebody just looking to start to get something new. You just hit on the very thing. I have to have it perfect. I have to have it right. I have to have it in the right way. I have to have it. And if we don't do that, or we get into something and we haven't been playing this sport like a business, like we were just talking about, it's very easy for a buyer to get into remorse and go, I don't really even want to do this deal. I'm afraid of it because the interest rates just went up. Is that affecting your market?
Yeah, I have this conversation at least 5 times a week with buyers, um, in regards to strategizing again, having a plan. And, a lot of them get intimidated by the rates going up and saying, "Oh, I'll just wait for um, the rates to go down." Or,
What happens when they wait?
well, it's somewhat inversely proportional, rates versus home prices. So in our world, we don't qualify people on the loan amount. We qualify them on the monthly payment. So we qualify them on the monthly payment. And, if rates are at 3% versus 6%, obviously the amount of loan you can get at 3% monthly payment is a lot higher than the loan at 6%. So, it could be the difference in, it used to be like an eighth was every 7,000. It could be, 150, $200,000 difference for the same payment. So how will the
That can
market
make a big
react to that?
difference.
Yeah, I mean how's the market going to react to that? Okay, so I'm buyer A and I'm going to wait until the rates go back down to 4% or whatever the number it goes down to. And then what do you think is going to happen when that same house goes on the market? There's going to be buyer A and buyer B through M also out there trying to get the same house because, hey, rates rates are good right now. We can borrow money cheaper, but
So,
people don't
so talk to
understand
me
that.
about tell me about the strat. Let's talk about mentality of the buyer, and then let's talk about strategy. Okay.
Sure.
So the mentality of the buyer thinks, okay, I'm just going to sit and wait. I'm going to wait until the interest rates come down. And
Right.
honestly, Don, I'm not seeing the market slowing down. Maybe it's slowing down in certain markets, and I certainly know in pockets it is. I mean, here in Malibu, there are 6 properties that are in escrow where a year ago there were 29. So, is it because there's less inventory? No, it's because there's a lot more on the market, but less is moving because of that price. So, from a strategic perspective, then I look at first time buyers, that come into the market. And, doesn't everybody have $1 million? It
Right.
seems like it, right? But it's here in California where the median price is how much, Don? That I read a
Well,
statistic that, and I'm not sure if this is right, but the median price that I saw maybe about 2 weeks ago for a starter home in California is 736. How many of you here in Los Angeles would love to buy something for $736,000? Okay, it's a fixer. You're going to have to do a few things, but and it's not in a great area. Median price. If you want to be in a decent price, you're looking at $900,000. And it seems like there's no shortage of competition for that kind of product. Would you agree?
yeah, I mean, and back to the median price, that's so misleading because California has all ranges of the spectrum, right? You could have somewhere in Los Angeles County versus somebody somewhere in Imperial County or Humboldt County. It's night and day as far as home prices go. As the saying goes, location, location, location. So, it's hard to put a firm number on the median price because that could be different just depending if you're
Okay, but let's compare that to the national average. The national
right.
average is under $500,000. So, in the markets that we're talking about, big MSA cities, there's going to be more competition. But on here on the West Coast, the numbers are still crazy. You would have thought that with all of the interest rates going up, that would drive prices down because there's only 2, 3 places where if you qualify for a loan, you're either going to have to push that number down in value, or you're going to have to push the interest rate down in order to hit that sweet spot number that the buyers are qualifying for. Are the buyers qualifying for higher numbers?
Um,
These are starter homes. I don't know about you, Don, but my first home was not $900,000.
I think first time home buyers have the come to Jesus moment where they have to be a little bit more realistic of what they're getting for a first time home. You know, a lot of them getting into condos. I just closed one for a condo for 550,000 where they had 15 offers, you know, and they had to go 50,000 over ask, you know. So you get
Let's
that
talk.
kind of stuff.
So let's talk about that, because I want some of our listeners, and if you love what you're hearing, love, like, share what you're hearing. But Don, talk to us about the competition that's out there. There's competition amongst buyers, there's competition amongst sellers, but more amongst the buyers, because a seller realizes that he only needs one, right? But the buyer is going to probably have to look at 5, 10, 15, 20, and they get worn out from this. So they finally, it's kind of like the Muhammad Ali style of buying. You keep beating on the arms until you can't hold them up anymore. You go, okay, I give in. Okay, I'm just not going to do this anymore. The real competition that's out there is competing on things that the buyers are not seeing. Can you talk about that for a minute?
Yeah. You know, some people have their anecdotal feelings as far as like, okay, this is what I'm going through, and there's there's other people going like this, so the market's got to come down. The truth of the matter is, just going back to inventory for a second, people talk about like prices got to come down. We're gonna have like 2008 where the market's gonna crash. I hear that all the time. It's
We're
just
not.
it's apples and oranges. It's not even like you can't
It's not
even
even the same thing. I mean, it's not
compare
even the
the
same.
two. Yeah,
You're right.
it's not. People back then were, lawnmowers saying they made $500,000 a year and qualifying stated income with a neg am loan. I mean, it's just like it was the wild wild west. I mean, today,
What were we thinking?
right. I mean, today the majority of the homeowners have a rate. So if they were smart and refi or purchase, they have a rate somewhere between 2.5% and 3%, and they got probably, 20 to 50% equity in their home. If I'm a homeowner, why am I going to sell? I'm going to sell my home to get into a rate of 5 to 6 to 7%. I mean, I'm not going to do that, unless they're an out of state. They're selling their move out of state. I mean, why would I sell? I mean, so sellers aren't selling unless they really have to. That's putting a crunch on the inventory, let alone in certain markets, certain areas. I mean, San Diego, Los Angeles. I mean, there's not a lot of room to build, so that's another issue. I mean, in San Diego, the county's motivating people to build ADUs to get people more housing. So, if you're in Kansas, that's a whole different ballgame. There, you can build out as far as you want, but it just,
As far as the eye can see.
but just going back to buyers, I mean, they kind of understand how the market works, and unfortunately, they're just going with how they feel and the struggle and how do people afford this? Well, there's a lot of families who can't afford it, and there's a lot of not only that, especially in California, there's a lot of foreign investment too. So that's another element you got to compete with, where a lot of foreign buyers want to live in a desirable area.
Don, I've got a question, and it really bugs me. So I want to find out from the expert, why is this? So it seems like our ability to purchase is tied to a number, a FICO score. And I know that there are a few other variables in here, but people like myself that are out there as independent contractors that are not necessarily 1099, but independent contractors, small business owners, we don't pull W-2s. And it seems like the market is more skewed to provide a better loan for somebody that is an employee of that pulls a W-2, that has, a track record of 2 years of income, and they file their taxes based on that. Not thinking for a second that somebody like myself is out in the trenches working my butt off to make sure that I can hit my numbers. And every day and every single month, I start over at zero. But yet the lender and the lending market doesn't look at that. They look at, wow, you are an employee and you have been employed for 2 years or 3 years, and you're a safer bet, even though that person has a higher risk of being fired and having to go out and find another job. That just bugs the heck out of me. Talk to me, soothe my troubled mind here, Don. Why does this market behave like this?
Well, you know, as far as my job goes, qualifying a buyer is, you just have to have an income calculator. Obviously, a W-2 employee is way easier to calculate income, especially if they're a salaried employee. You just plug in that number and divide by 12, right? Um, for, self-employed people, 1099, whether it's a Schedule C or an S corp or however they do their taxes, it just becomes more paperwork. And unfortunately, there are a lot of business owners in this business who don't show a lot of income for tax purposes. So unfortunately, if they do that, then they that's why we qualify people for loans of their income. So whatever they show on
That
their
is
taxes,
truly, that's the true dilemma. We tell the
right,
IRS we made all this money, but honestly, we didn't keep any of it.
right.
Why would we want to be taxed on it otherwise? Right? So if you could give literally 5 things that you could tell to an independent contractor that is thinking about buying, and they don't fit into the box. They don't fit into the traditional borrower box. What advice would you give our audience of independent contractors, entrepreneurs out there that find the second house? Maybe they already own, or maybe they are buying for a first time. What advice can you give them?
So it's just like anything, every scenario could be different, and you really have to understand their position and their business and what's important to them and what's not, right? So you could
Well,
go
that goes
plant,
without saying, but there
right,
must be some behavioral things that you're looking for that makes your job easier. Because really, at the end of the day, you're an independent contractor. You don't make money unless you sell that money, right?
right, right.
So how talk to me and tell us what 2, 3, 5 things would you suggest if they're thinking about buying? How do you line them up and stack the deck in your favor?
So what I like to do is, you know, take a snapshot of where they're at now. Let me look at your taxes. Let me look at where you're at now. You know, maybe they're fine where they are now. Maybe we can, just start the home buying process now. If they're not, then what I always do in my job is I don't tell the client what to do. I give them the options. So if option A is okay, if they've been in business for 5 years, we can go off a 1 year most recent tax return. They can clean it up. I can send them a Schedule C calculator or a Corp calculator, and they can plug it in. They can consult with their uh, tax advisor and basically bite the bullet for a better term, for the lack of a better term, for 1 year on taxes to qualify for a home loan. Or if they don't want to do that, they could always you know go to one of these non-QM loans where we can qualify them off of bank statements, profit and loss. Some even do state income. Obviously, those loans inherently for the lender are more risk, and with the higher risk is a higher rate. So so what's more important to them, to pay the IRS a little bit more for 1 year, qualify traditionally, or go the non-QM route and put more money down, have a higher rate? Maybe
Spend a
that works
minute on
personally.
that one, okay? Because I think this is an important point. You're going to pay somebody. So paying the
Right,
piper is going to mean you're either paying the IRS because you did make that money, and you're going to
right.
bite the bullet. And so as the listener, I want you to understand that you really need to calculate are you an S corp? Because if you're an S corp, you're going to be able to write off a little bit more or a little bit less. But the point is that you want to show the income. You want to show that you're actually making that money. So what tax rate and tax basis are you in is important, and you're going to compare that. You're going to compare that to what is the rate, what is the going rate for somebody like myself that says, okay, I want to buy something, but what's it going to cost me because I am a non-traditional, right? So if I'm non-traditional, what rate am I going to get is going to really correlate with how much money am I willing to put down on this. Folks, it is about spending money. It is about spending money. And if you think that, wow, I don't really have to put it here, you're going to give it to somebody. You're going to give it to the IRS so you can get that lower interest rate on the long term. And if the interest rates are low, maybe it doesn't make any difference. But in a market like we're in right now, what's your best advice, Don?
My best advice is, and I tell this to every single buyer, is just get in the game, especially if they don't own anything, because rates will come down. It's all the indicators are there. Rates will come down in a recessionary market. The economy is going to slow down. We're going to slow down. It's going to be painful for a lot of people in the next 6 to 12 months. And so how do you build the economy back up? You got to lower rates so people borrow money, so they invest it, and then the cycle continues where we get some growth here. So rates are going to come down. I don't have a crystal ball. I thought they would be a little bit lower this month. Again, the stuff going on with the Fed and whatnot is, they're basically, kicking the can down the road, but rates will come down. And, I, I, I would strongly recommend any person buying right now, don't even waste a lot of money in the transaction. Don't do a buy down. Don't do that because you're not going to be in that loan for very long. If you're sophisticated, you know, as far as what's out there down the road in the market. So, you know, but right now you're going to have lesser I say you're going to have lesser competition, somewhat, relative, right? So, depending on the price point, because we're already getting a lot of competition. I told buyers 3 months ago, get something now because, come April, come May, people get their tax return, they get a little chunk in their bank, and then they're going to go home shopping. So right now you're going to get more competition regardless, just time of year. So, and then what happens when the rates go down even further? It's going to multiply even by that much. So.
Don, I want my viewers to understand how they can reach you. And I think I just put we've got it right there. If you'd like to talk to Don about your loan, talk to him about pulling money out. Do you do equity loans or pull out equity so people can grow their business as a small business owner?
Yeah, I mean, I do everything mortgage related. I don't really do like loans tied to a business, but a loan tied to a mortgage, I'm your guy. HELOCs are kind of ugly right now. That's something
That
that
was
I
the name
would.
of the game literally 10 years ago. Today, that's not the game to play. If you need equity, it's better to refinance. Would you agree?
Yeah, it is. It just depends on the individual and their situation, their scenario. But cash out refinances, they can pull some of their equity, especially if they got debt or they need the money for something else. I mean, people never look at their blended rate. They just want to look at their shiny mortgage rate and say, "Oh, I don't want to touch that." So, you know, they're
True.
paying. They got a 3% rate, but then they're paying 21% on their credit cards. So, good for you. I mean, have your money work for you.
So true. So true. So, Don, I want to thank you so much for joining me today. I encourage our listeners, if you want to talk some money, you want to talk money with me on my show, you'll have an opportunity to see how to do that. But let's take a moment and thank him and show him the love. Put your shares out there, put your likes out there, put your thumbs up on there. Let's subscribe to this channel. And Don, thank you so much for joining us today.
Oh,
You have heard it here. Thank you
thanks
so
for
much.
having me. Yeah,
You're
and if
very
anybody
welcome.
wants to reach out to me, my cell is 619-513-8275. Feel free to call me. I'm not
I
like
think we need to do that again, Don, because I didn't put it up here, and do it slow so they can hear you.
sure, it's 619-513-8275. I'm pretty much always available, as Linda can attest to. I'm
Tell
not
me,
like
I
these.
call this guy at all kinds of hours, and he always answers.
So I'm not like these
I don't think he
these
sleeps.
normal ones that don't answer the phone after 4 o'clock. So on the weekdays. So, anyways, feel free to reach out if you have any questions about your personal scenario, and I'd love to help.
Awesome. Thank you, Don. And thank you for joining us today. Again, every Friday morning at 11 o'clock, join us for Money Talk. Because if you market something really, really well, you never have to sell. Do you like to talk about money? If you do and you'd like to be a guest, contact me at lindak360.com.